Hey YouTube family, it is June 16th, it is Tuesday, welcome. Big up day today in the stock market, Dow Jones up over 2%. This fake market continues to be pumped upwards, and it's getting to be obvious to anybody that's even paying partial attention. I had a customer today at work, she had to be in her early 60s, and I was talking to her, and even she knew the stock market was manipulated. Now, this woman, she wasn't retired yet because she mentioned that her 401k had taken a big drop, and then she followed up by saying that the manipulators moved it back up. And I started talking to her a little bit more. I'm like, oh yeah, it's just fiat currency. They can pump it back up. It's unlimited funds available. And she was like, exactly. So I probably could have talked with her for a long time, but I was at work, so it was a brief conversation. But she did let me know that she knew what was happening in the markets, and I think it's becoming widely accepted now that this is a manipulated market. Back just a couple years ago, I was called a crazy conspiracy theorist from a lot of people down in comments, for example. Now I don't see as many people saying that, and in fact, the retail investors are doing better than Warren Buffett. A lot of Robinhood traders even. We're going to talk about that. Before we get started, we'd like to thank you for your views, and we're approaching 55,000 subscribers. Thank you so much for helping out the channel, for being here, for your likes and your comments. Thank you so much. Let's start right here. Market Watch article, why Warren Buffett needs to adapt to this market and reverse his chronic underperformance. So even Warren Buffett is not getting the kind of returns that he usually gets. And shareholders of Berkshire Hathaway are starting to notice, and they're not too happy about it. Now, you may remember about a year ago, I believe, Mr. Buffett, Warren Buffett, moved to a $137 billion cash position. And we talked about a few different theories on that. Maybe he knew that something big was going to happen, the virus, all of the unrest, the financial collapse. Who knows what he knew? But we do know that he did take that big cash position, leading us to believe he saw something on the horizon. Now, I don't think he knew, and it's clear from his weak gains that he's had in the past couple years, he didn't know that the market was going to rebound like it did off of the bottom. And I'm talking about the stock market, not the overall economy. We're yet to see how the overall economy is going to rebound, if it is going to rebound. But the stock market now up nearly 50% from those mid-March lows. Even retail investors, percentage-wise, are outperforming Mr. Buffett. Let's take a look at this article. Robinhood traders nailed the market bottom, debunking the theory that retail investors are dumb money. Well, all you have to do is look at the manipulation, look at the political realm that we're in right now. They don't want the market to crash for obvious reasons. There's major political agendas behind this market rigging, and that's why I've been continuing to warn people, be careful, especially after November. Be very, very careful. No matter who wins, in my opinion, the incentive to keep this whole Ponzi scheme propped up may be ending after that November date. Now, the backstory behind this, there was a firm that tracked the total gain for Robinhood investors since those mid-March lows, and what they found out was that these investors, on a percentage scale, of course, outperformed Mr. Warren Buffett. Retail investors, Robinhood investors. So as you can see, people are coming about this new way of thinking, of seeing that this market is manipulated. I think they're looking at the agenda just like we look at here. But the old schoolers like Warren Buffett, even as worldly as he may be, I think he even underestimated the manipulation and the push into the stock market from the central banker, funny money, monopoly men. Well, speaking of a financial crisis, the IMF is out there slashing economic forecasts and warns of a crisis unlike anything the world has ever seen, and that is a quote. It's too bad that our leaders here in the United States wouldn't give us a similar forecast or a similar warning. Now, I don't think they want to spook the markets. I don't think they want to spook investors or the average spender, the average consumer, because we know that it's a consumer-based economy. So if U.S. leaders come out and warn people of a crisis, well, that could impact the illusionary recovery that we're going to see once more people go out and spend. And we talked about that just in our last episode. The more people that go out and spend, it gives the appearance of a good economy because you have the money velocity, more bartenders, more waiters, more service sector individuals will be needed, and that's going to make the jobs number look less worse than it really is. But sadly, a lot of these jobs, the service sector jobs, a lot of them are low-paying jobs. You might have heard over the past few years that the half of American households could not even afford a $400 emergency expense without putting it on a credit card. And now with the partial reopening or the slow reopening that we're seeing, do you think it's going to get better than it was before the shutdown? Well, I don't think so. But it's too bad we need a warning out of IMF instead of getting that warning from our leaders here. But you know the agenda, you know what's behind the market propping here. Speaking of U.S. leaders, let's talk about the Fed, or maybe we shouldn't call them leaders, maybe we should call them the fakers. Either way, the Fed is out there saying that the U.S., and listen to this, this is a new term, persistent fragilities are ahead for households and businesses. Right? Talk about a sugar-coated term. Have you ever heard anything described as a persistent fragility? Why don't they just be honest with us? The Fed is going to have to continue to prop this market up, to prop up the economy, to continue sending out stimulus checks. And it's my guess they're going to have to extend the $600 a week unemployment benefits, or they're going to have to double up the back-to-work incentive. That's also something else that's going to be pumped out of the Fed, is an incentive to go back to work to disincentivize people to just stay on unemployment. Now, I know a lot of you out there are saying, well, the people that don't go back to work, they don't get unemployment. Well, it's not that simple. A lot of people are not honest on their unemployment paperwork, and a lot of fraud and a lot of dishonesty slips through the cracks if you didn't know. Now, also, Fed Chair Jerome Powell, in a little bit more of a realistic explanation, came out there and said that the U.S. is going to have a long recovery. And this is an excerpt out of a Reuters article. Jerome Powell said the following, quote, "Something like close to 25 million people have been displaced in the workforce, either partially or through unemployment, and so we have a long road ahead of us to get those people back to work," unquote. Powell said that to the Senate Banking Committee. Now, interesting choice of words there, long road. It's the long road that they've been kicking the can down, and it appears they're going to continue to kick the can down this long road. But remember, when the kicking the can stops, when the propping of these markets stop, that's when you hit the cliff, and that's when the road goes off into a deep dive. And it's only a matter of time. The manipulators will not let this go on forever. Either one, they're going to pull back on the propping up of the markets of the economy, or two, the dollar is not going to survive and we're going to start seeing hyperinflation. I don't think that's going to happen in the near term, but get ready, something bad is going to happen. And there could be even other black swan events that we're going to see unfold here in 2020. My guess is to prepare or be aware about a systemic outage of maybe the internet, the power, the banking system. And speaking of a weakening U.S. dollar, CNBC article right here, "A dollar crash is virtually inevitable," Asia expert Stephen Roach warns. Now, Mr. Roach is out there predicting a 35% drop against other major currencies. I find that very interesting because every currency is a fiat currency, right? There's no country out there operating under a gold standard currency. And he went on to say the following, quote, "The U.S. economy has been afflicted with some significant macro imbalances for a long time, namely a very low domestic savings rate and a chronic current account deficit." And that's the end of his quote. As far as the savings rate, we know that Americans have been disincentivized from saving money. You're going to get 1% a year, maybe if you're lucky, on your deposit if you leave it sitting in the bank. So that disincentivizes people from saving and incentivizes people to either, one, spend it, or two, go out and try to get a bigger return, maybe opening up a trading account, going out and getting the biggest loan you can to try to get a home, get a bigger mortgage. Because people see these rising prices and they want to get in before prices rise even further because they don't want to be priced out. It's called FOMO, the fear of missing out. But the days of rising prices, in my opinion, are going to be very short-lived. I think they're going to continue to prop it up again through the rest of the year, but expect deflation coming very, very soon. After the next bout of deflation, then I expect hyperinflation as they come in with even more quantitative easing, more endless liquidity and pumping cash injections into these markets, into this economy. And honestly, I wouldn't be surprised to see the Fed balance sheet double and the national debt increase by $10 trillion in the next year. It wouldn't surprise me at all. And even the almighty dollar, just like every other fiat currency before that, is not immune to economic reality. And we will see the pain here. We just need to prepare. Thanks everybody for watching this report. Appreciate it. Bye for now.